Hello everyone, I am Dr. Sarika Makol, Associate Professor in Sagar Group of Institutions, Bhopal. In this video, we'll discuss about some of the important terms which we are usually used in stock market. From the subject Security Analysis and Investment Management in MBA 3rd Sem. So here we go. These are the important terms relating to the stock market. The very first term which we normally use or usually use in the stock market is market capitalization, which is the most important term, because on the basis of this we can just categorize the market into three categories: large cap, mid cap and small cap markets. So market capitalization is the measure of corporate size of a country. It shows the current stock price multiplied by the number of outstanding shares. So this is the formula to calculate the market capitalization. So it is commonly referred as market cap. I have just explained you that we categorize the whole stock market into three caps: large cap markets, mid cap markets and small cap markets, and these three categorization will only be done on the basis of this market capitalization rate, means by multiplying current stock price with the number of outstanding shares of that very particular company. So this is the term which we can use in the stock market. Now another term which we use in the stock market, or which makes sense in the stock market, is the capital structure, which means the proportion of debt and equity used for financing the operations of a business or an enterprise. The capital structure should be such which increases the value of equity shares or maximizes the wealth of shareholder. So the formula for calculating the capital structure ratio is debt divided by equity. So this ratio can be 80-20, 60-40, 50-50, 30-70, so that depends upon company to company that what kind of capital structure the company can manage. But if we have more of equities, less of debt, so definitely that company will help maximizing the wealth of its shareholders. Another term which we usually see in the stock market is cornering. So in finance, the corner the market is to get sufficient control of a particular stock, commodity or other asset to allow the price to be manipulated. So here, corner the market means to have the greatest market share in a particular industry but without having a monopoly. So cornering means that when we corner in the one market, like pharmaceutical industry nowadays is having the highest or the greatest market share, right? So that is cornering the market, but that doesn't mean that they have the monopoly in the industry. They may charge high prices for their products without fear of losing too much business. So that is known as cornering of the market. Speculation, which plays an important role in any of the stock market, in any country's stock market. So this term is used in the sense of, in the practice of engaging in risky financial transactions in an attempt to profit from short or medium term fluctuations in the market value of a tradable goods. Here, tradable goods means your shares, your debentures. So speculation can in principle involve any tradable good or stock or financial instrument. So speculation here means that when a person would like to earn profits in the shorter period of time, that is known as speculation. So basically the person who invests in the short term period of stocks, that person is known as speculators, and speculators will bear high risk in the market, and they only interested in the profit making companies or profit making shares. So many speculators pay little attention to the fundamental value of a security because they base their decisions on the price movements or the current price movements in the stock market. So basically we have four kinds of speculators in the Indian Stock Exchange. They are known as bulls, bears, stag and lame duck. So now we go further, the meaning of bull, bear, stag and lame duck. Now bull here means also called as Tejiwala is an operator. As we know that bull is the fastest animal. So bull also called as Tejiwala in the stock market. It is an operator who is hopeful of price rise in the near future. So in anticipation of price rise, he makes purchases of shares and other securities with the intention of selling them at high prices in the future period of time. So basically when the market is showing increasing trend, so that market is known as bullish market, or that trend is known as bullish trend. So he, being a speculator, has no intention of taking delivery of securities but deals only in difference of prices. So basically the role of the speculator is not to make investment of the money but to just take the benefit of the difference of the prices. Say for an example, in the morning when they purchase the shares, the share price would be 200 rupees, and at the end of the day or after 2 days when they would like to sell the shares, the share price will be 300 rupees. So they'll just keep the difference of 100 rupees with them and go out of the market. So this is the role of the speculator. So bull is also a speculator, but when the market is called as bullish market, when there is a trend of increasing share prices, or when there is an expectation of increase in the share prices in the near future period of time. Bear is just opposite of bull. A bear does not have securities at present but sells them at high prices in the anticipation that he will supply them business, purchasing at lower prices in the future. So bear is totally opposite of the bullish trend. In the bear trend, we are just anticipating anticipating that the share prices would come lower in the future period of time. Now stag is that type of speculator who treats its path very carefully. Means he is a reserved or a conservative kind of a speculator. He applies for shares in new companies and expects to sell them at a premium if he gets an allotment. He selects only those companies whose shares are most in demand. So that is why we are saying that he is very careful. He plays very careful. He chose those companies, only those who are in demand and are likely to carry a premium. So he plays very safely. He sells the shares before being called to pay the allotment money, because he did not want to spend an extra money on that very particular thing. So he just want to earn the profits only. So that is the role of the stag. Now lame duck is just like your bear. So basically it is nothing but a stressed bear. Means more worse condition as bear is having. When a bear finds it difficult to complete his promise, he is labeled as a lame duck, because he is not able to complete his promise. He is not able to give you the higher prices at the later period of time. So that person or that speculator is known as lame duck. Now another term which we normally used in the stock market is stock broker. Like we have property brokers, similarly in the stock market also we are having stock brokers, which helps the investors to make investment in the stock market or take right decisions, because we all did not have that thorough knowledge about the stock market. We are not expertise in the stock market. So to get good returns over our investment, we'll take the help of these professionals. So these professionals are known as stock brokers. So stockbroker is a regulated professional individual usually associated with a brokerage firm. There are separate brokerage firms, those who associated with or those who are having the appointment of these type of brokers, and they just give their services to the interested investors. Or they are also known as broker dealers, who buys and sells shares and other securities for both retail and institutional clients through a stock exchange or over the counter market, and in return they'll just charge some fees which is known as their commission, and this commission is also being fixed by the SEBI, that is Stock Exchange Board of India. It is not like that they can charge any of the fees from any of the investor. That fees is fixed by the SEBI guidelines, so they cannot charge any undue fees from the investors. So they are there for the help of the investors, and this is why they are known as professional individual, because they have done certain courses. Only then they can become the stock brokers. So these are the various important terms which we can use in the stock markets and which helps you to understand the stock market terminology. So thank you all.